Have you ever tried to figure out if you need to file an LLC or a trust or how to set yourself up before price appreciation happens for your digital assets? Well, that's what we're going to talk about today. So here I have an example. I have the privilege of talking with a lot of people who want to be proactive and set things up previous to price appreciation. And I do want to put this disclaimer right up front. Not a financial advisor. I don't give financial advice. Anything said here is for entertainment and educational purposes only. So always speak with your financial advisor before making any investment decisions. These are the considerations I always look at when having this conversation and, working through these things with an individual and helping them look at the options that they have. So their age, 65 years old, pretty close to retirement or at retirement. They're still working. They have a W-2 where they earn $50,000 a year. They are located in Texas. Their relationship, they're currently divorced, unfortunately, but they do have kids and they got grandkids that they want to take care of. They own their home, which is great, no mortgage. Their objectives are to retire and travel. They want to have passive income, and they currently have about $80,000 invested in digital assets. So what would this person need to think through? How could they position themselves to mitigate taxes and set themselves up previous to price appreciation to make sure, they're going to be taken care of? In this situation, we're going to have some just thoughts, right? Let's say, whatever they're invested in this next bull run goes anywhere between 10 and 100x. That's going to put them somewhere between $800,000 and $8 million that they have from their investments. And they might also have, a pension or 401k or an IRA. Maybe they've got something else stuck away for retirement too. But this is kind of their Hail Mary and what they're banking on to make sure that they have some passive income and they can set themselves up and they really are going to be able to retire because they're already up there in age, time horizon short. That's always a consideration. If they were younger, might be doing some things differently. Do they need an LLC? Do they need a trust? What are the costs associated with those things? An LLC is going to run you somewhere between $300 and $800 to set up, depending on what state and what service you use. Trusts could be anywhere from $3,000 to $25,000, depending on all the bells and whistles, what type of trust it is, where it's established, all those things. If you are interested in working with us to do that, you can book a time through the site right here. We would love to have a conversation with you. And if these things aren't applicable to you, we are going to make some other videos that should be listed right here that you can check out. And they may have, your situation that we can walk through. Here's the considerations. They're single, and you get $12.92 million here in the U.S. that you can move into a trust or an estate or gift into a trust or estate with no tax implications. If they were married, that threshold would be higher. You get $25.84 million. This is the highest that the gift tax in the U.S. Exemption has ever been. The majority of my lifetime, your lifetime, everybody else's lifetime, it's been around less than $1 million. So with, political changes coming into office, it's my anticipation that could be dropped. After 2025, I think that's when this one ends, and there'll be a revision for that. We'll see where that goes, but up until then, that's what you get. So we're going to play off those rules. So let's say, hit it big. We get the 100x. Maybe it's an XRP, XLM, Casper, HBAR, Algorand, Flux, Helium. I don't know what your investment is. This is applicable for any digital assets. Maybe it's Ethereum, maybe it's Bitcoin. We'll see. But so we're looking at 100x. We got $8 million. But before we get there, how can we make sure that we're set up to take profits? Because somebody that's looking to retire, let's be realistic. You're not just going to leave all your money in crypto. You're going to need to take some out to retire. You also want to deploy that capital in some way that can produce passive income for you. Maybe you're going to put it in an annuity or something else that's really stable, hedged, not going to have volatility like digital assets, and that income is going to come every month so that you're not worried about it. And those opportunities might exist, as digital assets progress. We might have staking, we might have liquidity pools, we might have other options where you could deploy some of those assets I just mentioned and they produce passive income for you. You're still going to have tax implications with those. And so LLC is probably going to be the best bet for this individual. They are located in Texas. So that was one of the things that I skipped over a little bit earlier, location matters. Texas, Florida, some of the other states don't have state tax, which is great. The only thing that you don't have in Texas, if you're going to file an LLC there, the regulations toward digital assets are progressive. They do have some laws around stablecoins here and money transmitter license that's required for that. Wyoming is the most progressive jurisdiction in the U.S. when it comes to regulations for digital assets. It also doesn't have state tax, and you're going to get attorney-client privilege. So if anonymity is important to you, probably the best spot to file it. That's what we help people do. If that's something you want to do, you can check out the link here to be able to file with us and set your LLC up. Once you have the LLC set up, you move your digital assets in there. Again, that's something we help people with. And let's say it goes to 8 million. Here in the U.S., depending on how long you held these assets, there's going to be different tax thresholds. So that's always another consideration as well. How long have you held the assets? Have they been purchased within the last 12 months? If they have, and you're single, if you're going to be taking over 250K, you're going to be looking at 35% tax because it's going to be short-term capital gains, and that's taxed as income tax. If you're over 600,000 roundabout, you're going to be looking at 37%. And then again, if you're not in Texas, Florida, Wyoming, South Dakota, one of these other states that doesn't have state income tax, you got your state income tax on top of that. So that's another benefit of the LLC if you're not located in one of those states. So, how do you offset those tax implications? If you have held it longer, let's say you've held it over 12 months, you're going to be looking at 20% capital gains, over $500,000-ish. And maybe you just want to pay that. Some people do. Some people think it's simpler. They don't want to worry about doing all the, things that we do. Put yourself into an LLC. Maybe it's too much of a headache. I've met with people, and maybe this is that person. Maybe they don't understand it. They just want to ride it out. They're going to wait, continue to buy digital assets, take profits in their personal name, and then they can move those profits into an LLC or a trust later on, and use that to offset tax implications. That's always an option, but you are going to owe. It's going to be a lot more difficult to mitigate those tax implications if they are in your personal name. And again, if it's short-term capital gains, those can be pretty significant. So that's where the LLC is going to benefit you, and why that might be a good choice in the short term if you're setting things up and being proactive. If this person had, north of $300,000 invested, maybe even less than that. Again, you got $12.92 million that you can move into a trust. If they had they think they're going to get 100x and they've got 130,000 invested, might be looking at the trust. That might start to make some sense at that point. Again, could be cost prohibitive. That's always a consideration as well. They do have kids and grandkids, so probably going to set up a trust anyway. Might make sense. If they didn't have grandkids and kids that they wanted to take care of, maybe you might look at a charitable remainder trust, and that's something you can do after you have the money. You're going to have to take profits anyway to set that up because of the way that that's orchestrated, and you have to make investments inside that trust. So anyway, lots of considerations here. These are always things that we look at when we're helping somebody walk through their options in the short term so that they can mitigate tax implications and set themselves up for success. Hopefully this has been valuable for you. This is the first in a series of 3 videos that we're going to do on the topic with 3 different avatars, and would love to have you in those videos. So subscribe, and we'll see you on the next one.